Your video. Hello. Hello, hello. How's everybody doing today? Thank you for being here. Give me 1 second. I just need to do one more thing here on my end. All right. There we go. Cool. That should work. Okay, excellent. Anyways, hey, glad you're here. Here's what we're going to do. Um, just so everybody knows. So everybody who is a member of my Zero to Pitch community, their questions, which they've already submitted right here, they will be answered first. And if you have any questions, you can put them, if you're watching on YouTube, you can put them in the comments and and I'll answer them there, or you can put them if you're watching on Zoom in the Q&A box or the chat box, and I'll answer the questions there as well. So anyways, I am super excited to have everybody here today, and let's go. We'll answer as many questions as we can in this 1 hour that we've got together. So let's go through our first question, which is a really good one. And it goes by, this is from Cheryl. How do we know that an investor is a legitimate investor? And here's what Cheryl writes. I have actually been scammed. Scammers are so good at what they do that they quote unquote seem to have the correct processes and documentation. But when it comes down to it, I end up losing whatever fees I've paid. And there's the optimum word. When you're raising money, you should never, ever, ever have to pay fees until the funding is closed. Typically in closing, when you're closing funding, just so everybody understands, typically with VCs or investors or what have you, there'll be some closing fees and legal fees. And depending upon how the documents are structured, typically, which is always an insane thing to me, but typically the startup pays the closing fees, and those are agreed to. But you don't pay until the deal's done and the money's in your bank account. Essentially, all this stuff is in an escrow account typically. So when somebody's asking for fees up front or fees to due diligence, which is a thing that I've heard a few times, it seems to be especially prevalent in Europe for whatever reason. But if you see it in Europe, you see it here, in all likelihood, this is not a legitimate investor that you're working with, and you want to walk away. So anyways, there we go. So hopefully that answers your question, Cheryl, on that. But it is not a good thing to have happen. Okay, here's a question from Chris. How do you best position an established delivery business to attract expansion capital? Here's the scenario. $1.6 million in revenue in 2023, 17% EBITDA, which means how much profit they're making, 20 employees, 17 trucks, over 8.3 million packages delivered over the last 5 years. Sounds fantastic, by the way. Congratulations on your success, Chris. Looking to add 5 local territories in the next 12 months and take advantage of 20% organic growth due to a merger. Okay, so the answer to this question is, and this is something that's really interesting to me because I get variations of this question all the time, which is this idea about, how are we going to position ourselves to attract capital? And I see this happen all the time. And my general answer to this is just run your business the way that you think your business needs to be run. In other words, and I'll get into a little bit more specific here, but in other words, don't try and run your business so that you're trying to make it into something that you think investors want. And the reason why I say this, and I know it's somewhat of a contrarian view, because I get the issue and I get the challenge of having to raise money and all the pressure on that, and you're running out of money and you're almost insolvent, blah, blah, blah. I totally get it. And I totally get the fear of all that. I've been there, so I know what it is. However, when you start twisting yourselves around, trying to turn yourself into what you think, this is the key word, what you think investors want you to be, inevitably you're likely to fail. So instead, my contrarian view is run your business. Run your business the way you see fit. Now, in Chris's case, if he's got this type of profitability, this is probably, I'm just going to guess at this, and a lot of this is dependent upon, well, how much money are you trying to raise and who are you trying to raise it from? This doesn't feel to me like this is a venture business. In other words, this is probably not venture capital we're talking about here. This is going to be raising money from, in all likelihood, who's going to give you capital for something like this? It's going to be probably people in and around your industry would be my guess. And that's always a good place to start when we're trying to raise capital of any source, is people who know the business or know the industry. So what would these people look like? They would look like, in Chris's case, probably retired executives who are wealthy, still want to be involved, still like the idea of giving back, and want to make money. And they look at you and they look at your business and go, wow, it's a really cool business. And I don't know how much money Chris is asking to raise, but let's say it's a few $1,000,000 or something like that to expand and grow. And you round up 4 or 5 of these people, they write 2, 3, 400,000. There it is, 6 million. Okay, thank you, Chris. I ask a question, I get an answer. So 6 million, that's a reasonable amount. So that, when I think about that, that may skew things a little bit here in terms of how are we going to pull this off, because that may be a combination of a loan, for example. I just don't, without seeing more about the business, Chris, and maybe this is something, we can discuss, when you join my paid group in terms of how we get at this, because I need to know more particulars about the business to really understand whether or not this is going to be something that's fundable, and by whom would be the answer. But I'm kind of thinking, the way I was kind of thinking about this, if it was a smaller amount, and by the way, that's another question, is 6 million the right amount? Because that can be challenged as well. But if it was a smaller amount, I would say go out and raise money, from retired executives, what are called family offices, people like that, because they're there, in and around this business. You can always be guaranteed about it. Think about it. There are people from FedEx who've made tons of money who probably would love to give back, who would be interested in something like this. And there are other companies like that probably you could go out and find people who would be interested in participating. Can do smaller. Okay, so yeah. So anyways, that's something we can talk about more in more detail, but those are my initial thoughts in terms of what to do. Second, there we go. Can do smaller. 6 million gets all 4 or 5 units. Okay. I don't exactly understand what that means. But anyways, need to know a little bit more on that one. But there are always ways to find funding. If you think about your various units or I see. Okay. Yeah, there's a lot more to delve into here about whether or not you want to go after 4 territories at once. Are you just in, for example, in your case, Chris, is it just 1 territory, roll-up strategy, leveraging? Beautiful. I love it. Okay, so you're rolling up. Okay. So I've been involved in a few roll-ups before, and this is all about being able to buy businesses at good prices is a big part of doing this strategy really well, is being able to buy businesses at good prices and leverage that to continue being able to do what you want to do, and being able to expand. So I think this one, we've probably spent a whole hour on what to do here. I'd love to learn more about this and love to learn more details about this as well. So anyways, that's my high level answer, Chris, in terms of what to do. I hope that helps. Certainly, I'd love to discuss more with you about this. And perhaps we can do that in the office hours that I have in my paid community. Okay, so let's move on to the next. I've gained this out of $20 million, 15 territories and 3. Okay, cool. All right. Thank you. Thank you for the extra information. Let's move on to the next question on our list here. And this is from Roger. By the way, if you have questions, put them in the chat box, or you can put them in the chat box on YouTube as well. Do you have any insight on getting investors even before the pitch deck stage? How do very, very early on startups trying to raise funds with friends and family or solo investors for fundraising? Okay, this is a really good question. So when you're just starting out, in fact, it's so funny that we're talking about this because I'm going to release a video on this tomorrow. And I will, and I was asked, one of the questions I was asked in my onboarding thing on Monday was, will I release videos a little bit earlier for people who sign up for the community? And my answer was yes. So I'm going to post it in the community later today. But the gist is for most people, and I would say it's 99.9% of the universe, including me, by the way. If you're starting out, you're going to start off with your own money because none of us really have a big enough name where somebody is just going to fund us instantly. And even if we're going to get funded with no traction in the marketplace, no product in the marketplace, and just a team, which is what I did, by the way, which was very difficult, it takes time. So what do you do in that particular case? Well, whether we like it or not, we're going to have to raise money from our friends and family. That's typically how it goes. So when we do that, friends, family, and ourselves and our co-founders, that's typically how we get started. And you have to be kind of very frugal about what you do. You don't really have a lot of options and choices. You've got to just find a way, to get from point A to point B when you're in this situation. It's difficult, to do this. It is what it is, but this is what we need to do. So that's what you're likely going to have to do, Roger, is just do this. So I would challenge one thing, and this is somewhat contrarian as well, but I would look at my pitch deck as my business plan. That's the way I view pitch decks, is pitch decks are the modern business plan. And it's a great way to communicate to anybody that you're thinking of raising money from what you do. So why not get this done sooner rather than later? Why not have all this information now? Just saying. I mean, I think that would be a good thing to do personally. So I kind of like the idea of, doing this now, getting your pitch deck done as quickly as possible. And it's a much more, your friends and family anyways are a much more forgiving audience. And start getting out there, start telling your story and trying to raise whatever amount of money you can to get your business off the ground. So I hope that helps, Roger. Let's go to our next question, which is from Mihul. I hope I pronounced your name right. It's my first startup, which is an early stage. Does the pitch deck need to be visually appealing or can it be normal? Okay, well, I have done a lot of posts on this. I think I've done some videos on this as well, on whether we should really try and pretty up our pitch deck. And I am in the camp of do not try and pretty up the pitch deck. And the reason that I'm in that camp is that sometimes in our desire to make it look pretty, so to speak, we do ourselves harm, as hard as that is to believe. And in other words, the beauty of the deck, in other words, somebody comes in there, you hire a designer, you spend money, and they make it look so cute and so pretty that it gets in the way of what you're trying to do. The best pitch decks are just a simple white background, simple text, minimal text actually, and simple graphics. That's it. As an investor, you don't need to see that your deck looks beautiful. All I want as an investor is to just be able to see the information clearly and succinctly and easily. And if you can do that, then great. You do not need to pretty up your pitch deck. In fact, more times than not, it gets in the way. So there's my answer to you, Mehul. Okay, next question, and I'll get to the rest of the questions that people have here, if they have any. Господин writes, How do we scale our companies after successful bootstrapping and delivering the MVP? I have tried with multiple quote unquote marketing people, including some wanting over 50,000 euros. Wow, for just consulting. Still, when I ask for any warranty, they usually disappear without a trace. Well, I'm not surprised. So it's hard to warranty anything. Personally, without this is a tough question to answer, but I'm going to do it in a generic sense. Let's say, for example, we scale our business, we get our first product out, and we get some form of revenue. Let's say we're up to maybe 10,000 euros a month or $10,000 a month, whatever currency we want to be in. So we've got to, and depending upon the business we're in, maybe it's a few customers, maybe it's a few hundred customers, depending upon what our model is. To get to that next stage, and when I say next stage, the way I think of businesses is this way. I kind of think of them in what I'm going to call logarithmic decades, which kind of shows my engineering background. But I think of them this way. When we have 0 customers, what do we want? 1 customer. When we have 1 customer, what do we want? We want 10 customers. When we have 10, we want to scale to 100. When we have 100, scale to 1,000. All down the line. Get the idea. And it's the same with revenue. When we've got $0, what do we want? Or 0 euros. We get that first euro. When we get to 1, we want to get to 10. When we get 10, 100, so forth and so on. So let's say that in your case, Господин, without knowing more, you've scaled this thing to 10,000 euros a month, which isn't bad. What's our next goal? It's to get to 100,000 euros. Well, to do that, in all likelihood, to go hire a quote unquote marketing organization to help you, I think is a mistake personally. I think you should be the one driving sales, driving revenue, driving leads, you and your team, which is probably still pretty small. When we start outsourcing this stuff to other people, especially early on, that's when the problems happen. And by problems, I mean is that we throw money away or we just can't afford it, which is kind of what you're saying in your particular case, Gospin. And it's like, my God, I don't want to spend 50,000 euros. I don't blame you. With some group of people that you don't know, forget it. I wouldn't do it. Instead, go figure it out yourself. Even if it's not perfect, it doesn't matter. From a sales perspective, the most effective salesperson in your company forever will be you. Period. So don't farm it out. From a marketing perspective, to get those initial customers, to get that MVP out, to get people to look at it, you had to do something, to be able to do it. And that's the thing. We're very, the thing that we don't realize about ourselves as entrepreneurs is that we're very industrious. We're creative. We have to be to survive. If you think about this idea of how are we going to start a business with no money, that's the challenge. So I would push back to you and say, what can you do? How can you find these customers? How can you do it efficiently? What have you done to get your initial customers? And it doesn't matter whether it can scale or quote unquote scale or not. Scaling is just getting to that next logarithmic decade. That's it. That's all we want to do. So for 1 customer, how do we get the next 9 to get to 10? You get the idea. And if we're at $1, how do we get to 9 to get to how do we get 9 more dollars or 9 more euros or whatever currency we're in to get to the next 10? You get the idea. That's it. That's all we need to do. That's it. So think about it that way. That'll make your life easier than worrying about how am I going to scale to $1 billion in revenue or 1 billion euros. You don't have to worry about that right now. All you have to do is just get to that next level. All right, so that's all the questions that I've got, at least from the initial audience. So if you have any other questions, put them in the Q&A box for me, and I'll be happy to answer them for you, or put them in the webinar chat if you are on Zoom, and you can put them in the chat if you are on YouTube, and I'll be able to answer them as well. So let me look in my Q&A box. Okay, so I've got one here, so I'm going to answer Obet's question. What's the best way to attract investors in a seed? I think that's a seed round to prototype stage when you've spent all your funds. Okay, well, that's not a fun place to be when we're out of money, which is a real challenge when we're there. So how do we attract investors? Now, here's the thing. Investors are not charities. And I'm saying this in somewhat of a harsh way, but it's just the reality that it doesn't matter, whether you're out of money or not to them. They just care about, are you a good bet, for me as an investor to get to the next stage. That's all that they care about. That's all I would care about as an investor. So it's a harsh world out there. That's the first thing about this. So if we're trying to attract investors and we're very early on, depending upon how early we are, typically what do? It goes back to the first question I was asked today, or the second question, which is friends and family. That's typically what it's going to be about. It's going to be about friends, family, co-founders, putting in whatever funds you have to get you to that next stage, and then just being very industrious, very creative about what do we do. If you don't have a product on the marketplace, it's difficult, to get people to put money into your business. It's just the way it is, unfortunately. And this is the challenge. And if you're sitting there and you're just about out of funds or wherever you're at, I totally understand the challenge of all of this. It's really hard. If you're going to find people that are outside of your community, and sometimes you will find people that are interested in investing with you early on, in other words, and these would be angel investors. My basic advice for people, if we're looking for angel investors first, this is just looking for them. Then the second piece would be, how are you going to get them excited? Well, the first piece, if you're looking for them, is use your network. And typically our network is bigger than we think. So use that, keep asking for help from everybody you know. And amazingly, you start finding people who can help you. That's one thing I would do. The second thing I would do is whatever stage you're at, you've got to go explain, in whatever way you can, to get people excited about what you're doing and the potential about what you're doing, and help people understand how great your business is and how exciting it is for them and how they're going to make lots of money. That's typically what angel investors would be interested in, or VCs. Now, typically, if you're at the stage you're talking about, very unlikely you're going to get VCs, maybe very early stage angels. If we're talking about friends and family, typically friends and family invest for a different reason. And that's because they're your friends, they're your family, so they want to help you. So that, an investment there might look like a loan or something like that, where they get paid back over time. And they're not so much interested in making huge returns. They're more interested in just being able to get their money back at one point in time. So anyways, I hope that helps with that. I totally understand. You just got to kind of fight through it. Okay, so let's see what we got. Okay. What's the best way to approach PE firms? Okay, I have a prelim list of 200 plus potential firms and was thinking about starting an email / call them, starting an email, and then send my brief 2-pager to get an opportunity to pitch. That is a way. Typically the best way always is going to be through warm introductions. In other words, if you know somebody that knows somebody inside of the firm, that's always going to be the best way, is going to be that. So that would be approach number one. Approach number two, if you have a preliminary list of 200 plus potential firms, is I would whittle that list down. I think it's great you've got a list. That's really good. I would whittle that list down. I would try and get that down, by geography first. In other words, wherever you're located in the world, the closer you are in proximity to your investors, especially early on, the better. That would be way one that I would do things. And then way two would be I would whittle it down by what these people do, because not all investors are created equal. We don't invest in the same stages. Investors don't invest in the same type of businesses. So you want to find people that invest in and around what you do and are hopefully located and are interested in investing in your stage of business. Those are your best bets for what you're trying to do. So I hope that helps. Okay, and then we have Naresh, my friend Naresh. It's good to see you as always. Suppose one comes to a point when one is answering the ask to an investor when he wants to know details like cap structure, board seats, etc. What kind of questions should one ask them? Is it okay to ask the investors to speak to a couple of his investors for understanding how was their experience? Is it okay to ask how much dry powder he has or how long will the due diligence process take or timelines, etc.? Okay, this is a fantastic question by Naresh. So when we're dealing with investors, this is another thing that I think a lot of people are afraid to do, which is ask them questions about their process, about where they're at, about how long. Can I ask for references? Well, guess what? Investors are going to ask you for references. Why shouldn't you ask them? Of course, go ask. Ask to speak to a couple of people that they've worked with. Even better, ask to speak to a couple of CEOs who have failed with them, because that's when you're going to find out. Because it's easy to back a horse when the horse is winning. It's more interesting to see whether investors are going to back the horse when the horse is failing. So yes, to everything you're asking, you should absolutely ask that. Ask it in a polite way, of course, but those are fair questions because we have a right as founders and CEOs to ask our investors about how they do their business. You're looking at, especially for early stage companies, and my bet is most of you on our AMA today are early stage. We're looking at a 7 to 10 year relationship with our early investors, typically. That's like a long marriage, right? So in a marriage, you want to make sure that you're in love with the right people at the right time, and that they're going to be with you and that they're going to be there for you if things don't go well. So I hope that helps, Naresh. But yes, go for it. All of you go for it. Ask questions. All right. Michael asks, initial seed capital sourcing, friends, family, previous customers, and or vendors. Well, the answer is yes to all of them. That's my, it's kind of a fairly broad question, Michael, but the way I look at it is it can come from any of those. Yes, it can come from customers. Customers, by the way, are another great source for capital sometimes. And you can get this in very interesting and creative ways. Get people to prepay. It's a source of funding. Cut them discounts. There are all sorts of interesting things you can do to get people to pay up front and to get money in the door quicker, which is what your goal is. Just be creative. Here's the thing, there are no rules. It's just up to you and your creativity to figure it out. All right, let's go here. Let's see what we got here. Okay. Okay, here is a question. This is on the YouTube feed. Okay, let's see what we got here. How an overseas startup outreach VCs in USA. Okay, in other words, if I'm over wherever I am in the world, how do I reach out to VCs in the United States? I am the founder of a startup in Pakistan. Okay, that's interesting. And bootstrap with my own money. Pitch deck is ready. That's fantastic. Congratulations. There's more. The MVP is live and have generated huge traction as per the biz. Need, but not much revenue. Okay. I've been sending cold emails to VCs, but to no use what to do. Okay, well, here's the deal. It goes back to the same question that I was having with somebody else regarding, where do I find my investors? He's got a list of 200 investors. The challenge for you being in Pakistan is it's going to be really difficult to raise money in the United States. I'm just sorry to tell you that. It's really difficult to do that. Really hard, to do that. So being real and being realistic, and I recognize that maybe finding people in Pakistan isn't the easiest thing in the world, but that's your best bet. And it may mean that you have to go slower. It may mean that you have to do things in a different way than you hoped, but it's going to be really difficult unless you've just got something incredible, really incredible, not just minimal traction, minimal revenue, but you're doing $1 million a year on your way to 10, and it's clear you're going to get to 10, and it's clear you're going to be profitable, in very short order, stuff like that, whatever it might be. But in the situation that you're outlining, which I recognize is very vague, but still, in the situation that you're outlining, it's going to be really difficult, if not impossible, to go raise funding in the United States. So my recommendation, as tough as it is you're going to have to find a way on your own, to grow your business. And maybe, just maybe, you can find some wealthy people in Pakistan that can help you. That's your best bet. VCs in the United States, investing in a Pakistani company is going to be really tough to do. All right, next question. Be the builder yourself and create the product. Is that what I should do, sir? I have absolutely no idea. Typically, I would tell you to build the product yourself, yes, and create the product yourself, yes, because if you think about it, where's your IP? So you're probably better off doing it yourself. In almost all cases, I recognize people farm things out. I recognize that that is a strategy, but it creates risk, and it reduces the IP that you have, because the IP, in other words, the product that you're creating, your intellectual product, that's what the people that are creating it. So the great thing is, if you can have a small team working with you, and this team does it, you've got it all here, right? You haven't lost it. Okay. All right. How do you safeguard IP during due diligence? An example of this going wrong. Well, typically in due diligence, now, one thing you will likely not be able to do in due diligence with investors. Now, I'm going to balance this a little bit here. First, with investors, typically investors are not going to sign NDAs. They just rarely do it. Rarely, rarely, rarely. However, they farm out their due diligence more often than not. That's the interesting thing. It's kind of cool, actually, and kind of interesting that they do it this way. So depending upon the person and who they are, you have to look at their background and decide, whether or not you want to have this person do due diligence on you. I've had this happen, interesting enough, where I've had competitors, do due diligence, and that puts you in a very interesting place, when this happens. So you have to kind of decide, what you're going to reveal and what you're not. But remember this. At the end of the day, your goal is raising money. That's your goal. And I am a fairly paranoid person. I used to be really paranoid when I'm younger, so I'm less paranoid now as I've gotten older. But still, that paranoia that we have about everybody's going to steal my idea and they're going to take it and run with it, most of that is unfounded, quite frankly. It just doesn't happen. And it's not something that we have to worry about. And if you think about it, there's some logic to this. Typically, investors don't want to steal your idea, because investors want to invest. So they don't really care, and it's a people business. And if they get the reputation for stealing ideas, they're going to be out of business, or maybe not out of business, but it's going to reduce the number of people that want to work with them. And the people that are doing diligence, typically, they don't want to steal your idea either. So most of the time, I just really wouldn't worry about it. Worry about the more challenging thing, which is raising money. That's what I would worry about. Okay. So repeat question. I'm from Tanzania and I have a startup with a super app. How can I get investors in the US? I just answered this question for somebody else, and it's really challenging. And my answer to you is that it's going to be really difficult for you to be able to raise money in the United States. Your best bet is where you are. As difficult as that is, as challenging as that is, as hard as that is, that's the place where you're going to have to find a way to get this company off the ground. Okay, let's go to, let's see what we got here. Second. All right, let's see what we've got. Okay. Gospodin asks, in continuation of the questions regarding IP, what about once you have a product? Should we worry about customers or partners reverse engineering our products? Okay, yet another really good question. Okay, this is great. Okay, fantastic question. Okay, there are two sides to the coin here. First, when we're small, it's really difficult, to even if we have patents, to enforce our patents because it takes money to do all of this stuff, and we're typically very cash strapped. So what do we use patents for at the beginning? No, this isn't exactly what your question is. I'll get to that in a second. But what do we use patents for in the beginning? We use them as almost like defense. So we're defending. In other words, maybe if somebody violates our patents, maybe we'll go after them. More likely we won't, but if we can use them to trade with other people who are violating our patents, typically competitors. If they're violating ours, then maybe we have an ability to trade something of theirs. That's typically how it would work. In terms of, what should we worry about with customers and partners? Well, it depends upon how complex what you're doing is. So this is very much, if it's something really simple that can be reverse engineered. I don't know if we're talking about softwares or something you can put in the code to block people from doing that. That would be the first thing. You can do that. But I would again tell you, probably don't worry about it. Is my thought process. I just wouldn't worry about it. It's not worth it, to worry about it. I would just keep moving, keep going. The way that the other answer to this, there's a third answer, as I'm kind of thinking on my feet here. It's a really good question, by the way. The third answer here is, why not? The other answer here is just keep innovating. In other words, let's say we start off with our MVP, whatever it might be. Is that the end of what we're going to do from a product development standpoint for the life of our company? The answer is no. We want to keep innovating and innovating and innovating. So maybe we start off with this kernel of something, which maybe is in your particular, let's use your question as a proxy here, is something that is copyable and somebody can reverse engineer it. But by generation 2 or generation 3, we've got something that's so dynamic, so different, that it's really difficult to copy. And this is the answer, by the way, to all of this, is you're not the only smart person in the world. There's always somebody else out there who's just as smart as you, who, if they want to, can do what you're doing. It's really interesting. I used to get asked this question when we were raising money. And in my world, for those of you who don't know, my background was analog semiconductors. And we were, our stuff was pretty complex, in terms of what we were trying to do. And you needed really A-level engineers to do the things that we were trying to do. But when I got asked this question, my answer, by the way, to investors was this. I would say, you know what? Just like I said, there's always somebody out there that can do what we're doing, who's as smart as us, but it's going to take their best people to do it. They're going to have to drop the projects that they're on to do it. But yeah, of course, there's somebody out there. And that's the reality. There's always somebody who can reverse engineer what you're doing, steal your idea if they really want to. That happens all the time, in industry. And if you do something that's really successful, somebody else is going to come around and try and do a copy or something similar to what you're doing. So what's the answer? The answer is innovate. Just keep innovating, keep moving. That's the answer. There was a business I was running years ago where we had all of the patents, blocking patents, very specific patents, you name it, we had it. And we had 14 direct competitors who were stealing our patents, by the way. And this is when our company got over $100 million in sales on our way to $1 billion. And we went after some companies for patent infringement. Other companies, we just said, forget it, because some of these companies were Texas Instruments, Analog Devices, huge, multi-billion dollar businesses where we had no ability to really fight them in this way. So what was our answer here? And interesting enough, what do you think happened to our business? Well, we ended up growing that particular product segment to over $200 million in revenue. Kind of interesting. And we ended up with gross margins. This is in semiconductors, by the way, analog semiconductors of over 70%, net margins of over 40%. And we ended up with, depending upon the product area, we ended up with about 80% market share in this business against really big companies. How did we do it? The answer is what I told Gosper. Innovate. We just never stopped innovating. We just kept moving, and they were always behind us every step of the way. That's the long-term answer here. That's how you win. So I hope that answers your question there, Gosper. Okay, let's move on. We've got some more questions here. We've got about 15 more minutes in our time scale here. We'll end at the top of the hour. Okay. Kuba asks, hi, Brett. What do you think about a video? I think that means video pitch deck. 3 minutes on YouTube. I don't know. I think that's a risk. You know, personally, you got to get it really right. You've got to be really good at what you do, you know, to make it go. And from a communication standpoint, it's really challenging. 3 minutes is a long time, but it's going to be those first 10 seconds or so that are going to make or break you, or maybe even those first 7 seconds. So you've got to really be good at this to make it go. By the way, in a pitch deck, it's the same thing, but the pitch deck's a normal format. If we're trying to get, you know, investors to see what we're doing, you can effectively send cold emails to investors. I've done it. I've gotten meetings. You can do it. It is doable to do this. The trick is always going to be in getting people to open up your email. And if you're going to do this by video, it's going to be to get them to see the video. You know, how are you going to get people to see this? It's the same challenge either way. So you just got to be really good at your communication if you're going to do this in video. And by the way, in a pitch deck, you have to be really good too. It might be a little bit easier in a pitch deck to do it because I can scan a pitch deck in less than a minute and know whether I'm interested in investing in it. And that's what I think most professional investors do. They would scan the pitch deck, and it's probably easier for them to scan a pitch deck really quickly than it is to look at a video, which is going to take time. Hope that helps. Okay. Kelvin asks, my startup in transportation and tourism in Kenya is seeking funding. My question is, for a capital-intensive venture whereby machinery or equipment is necessary to set up the ball rolling, how does one go about making the pitch attractive for an investor when family and friends are either in no-go zone or cannot afford the funding? Okay, well, this is the challenge. When we have capital-intensive businesses, I've been in one, so I know the challenge. You've got to show people that you have a big payoff. That's what we're after here, that you have a big, big, big payoff. That's it. That's the thing. That there's a big payoff for them, that it's going to be worth the money, that it's a low risk, even though it takes a lot of capital to do it. And you're going to have to show people, you know, along the way, how you can prove out your business without the capital, if it's possible to do it. That's the other challenge with these types of things, is what can you do very cheaply? So there's a company I'm involved in, which is now worth over $1 billion. Capital intensive company, needed lots of money to get started. But what did they do in the beginning? Because it was a hardware company. What did they do in the beginning? They did it all in software. Showed people in software, which really reduced the amount of money they had to spend, you know, how to get from point A to point B. And they kept doing this strategy all the way through. So there are all sorts of ways, if you're creative, to prove out your business with minimal funds. That's going to be the easiest way to get the larger funds that you're looking for. I hope this helps. Okay, let's see what we've got. More questions? Okay. I've got one more question over here. Let's see. Okay. Malloy Aircraft asks, how would you approach a customer with an MVP if they were a large company and you are a startup? Would you approach the C-suite, events, social media? The product would effectively create a moat for them. Well, that's great. You have to find the right person. And it could be any or all of these people. With big companies, you need to find a stakeholder. And it's going to be really challenging because typically it's all about the politics inside of the big company, how they're structured. So it's tough to give a direct answer to this one, but you've got to find the right person and you've got to be able to show them that there is value in working with you. Because if you think about it from the big customer's perspective, why do I want to spend time with you? I've got all these other things going on. Why do I want to spend time with you when I'm busy? And typically, it's not going to be the CEO who's going to want to do this. It's going to, depending upon what we mean by large customer, it's typically going to be some executive who's got all sorts of goals, is under all sorts of pressure. And now you're asking this person to disrupt his or her life, to work with you on something. So that's I will also tell you, this is a really tough strategy and really tough way to go at the beginning. Trying to find big companies to support you at the beginning is I'm not saying it can't be done, but it's a really tough strategy, I would say, because it takes time. It's political inside of these companies. It's going to be difficult, especially early on. No, that's not what you want to hear, but that's my reality. Okay. Fabian asks, how much money do you guess I would need to start a direct to date app in the United States? How much influencer should I pay? Okay, well, this is not an area where I have any expertise, to be honest with you. I don't have expertise on what influencers cost. How many cities would I go into? You're asking me to map out your business strategy. I'm not an expert in this area. Um, you're doing something. I will say this about dating apps without knowing anything about the space. It seems like there are a million of them out there. So what's going to be different about yours, Fabian? That's the most important question you got to answer, for yourself. What's going to be different? What's the audience that you're going to go after? How are you going to do this in a different way than all these other apps that we see out there? Because that's going to be the key to your success, is going to be that. So anyways, hope that helps. Sorry about that. Okay, any other questions? You can put them in the chat box. You can put them, if you're watching me on Zoom, you can put them in the chat box. You can put them in the Q&A area if you're watching on Zoom as well. And if you're watching on YouTube, you can put them in the chat box as well, and I'll be able to answer them as well. And while we're waiting for more questions, for those of you who are not part of my group, and I should find this answer out actually, so let me just do something really quick, which I'm going to do. Hang on. I'm going to put this in the chat box for everybody who is on YouTube very quickly. Assuming it gets me there. Okay, there we go. Okay, here I'm putting in the chat box. If you are not part of my group on Skool, the link that I just put in there, and I'll pin that to the top of the chat. This is where you can join the community. It is free, completely free. You do not need to spend any money. All you need to do is just go to that link, click on the join button, join now button, and there's a few questions you have to answer, and then the administrator will let you in. So that's it. And you can be part of this thriving community that we have, which is growing every day. And it would be great. I've got a ton of subscribers on YouTube. It would be great to get all of you into the community that we're building in school right now. You can see it right there. And I'll pin that to the top so everybody can see it. Okay, so let's see what else we've got. We've got a few more minutes left here for questions. Second question, how should a team work from the same place? Or should a team work? Yes, absolutely. As much as you can. As much as you can at the beginning, you absolutely want to work, and in fact, as long as possible. One of my investors used to have this great saying, which I used to love. He was a paratrooper in the Army, and I used to love the way he thought about things sometimes. And he would say to me, Brett, you want to keep your supply line short. And the analogy that he was trying to drive was that we want to be close in proximity to what we're trying to do. The closer we are, the easier it is to communicate, especially when we're small. If you've got people all over the world, not saying it can be done, it gets done all the time this way, but it's a hell of a lot easier. That's what I would tell you. Okay, so we've got another 5-6 minutes to go here until we get to the top of the hour and got to cut things off. So we've got another question here from Anubhav asks, what do you think of the one and done funding round? Example, Zapier. Will seed round investors be okay with that? Well, if you really only need one round of funding, God, yes. Because then that means as an investor, fantastic for me, because I don't get diluted anymore. I don't have to put more capital into this. It's very difficult to do that, but if you can do it, fantastic. That's great. If you don't need more money, don't take more money. Seriously, there's no reason to do it. Okay, this person I have to laugh at, Chef Boyardee. I love the moniker. Do I have time for more questions? The answer is yes for a few more minutes. And Chef Boyardee asks next, he says, I was wondering when creating a tech startup, how much weight is in the success of the technology? Okay, I'm not exactly sure, but I'll give that a whirl. If you're going to do there are two pieces to this, right? Obviously, if we're doing a tech startup, whatever that technology is, the technology has to work. That's step number one. Now, having said that, there's a lot of companies that have technology that works, but can't win. Why is this? Because we think that selling is a breeze. Or as I was talking about earlier in today's AMA, we just farm it out, to somebody else, and inevitably we fail. To be able to win, you have to have customers. You've got to have sales. You've got to be able to market effectively. And if you think about the combination of marketing and sales, it's two pieces. There's the marketing piece, which is the piece of how are we going to generate leads? How are we going to find people that are qualified customers? Then there's the sales piece. How are we going to close the leads that our marketing organization has given us, however they've done it? And this is where too many businesses fail because they take this for granted. So yes, the technology is critical. However, you've got to have the sales and marketing piece as well to be able to make all this fly. So I hope that answers your question, Chef Boyardee, who I love that moniker, by the way. Very cool. Any more questions? I can answer maybe one or two more questions in the time we've got remaining here. Any more questions? Okay, I'll give it a quick minute or so, let's say. Again, if you're interested in joining my free community where you can ask questions inside of there, you can get access to other things as well and be able to have priority on these AMA calls, which will be great. This is the way to do it. You can go to this link, which I'm going to pin right now. I can do it. I just pinned it, and it is pinned to the top of this chat. So you can see it there for anybody watching the replay of this online. Great. Thank you, Malloy Aircraft, for signing up. Very cool. And hopefully all of you will, and you can join the group and be part of it. Okay, looks like we've got no more questions from either side. So I am going to call it a day. So thank you. Thank you all for coming. We'll be doing this. Of course, always happens this way. right at the end. Okay, I got a couple questions here. So let's go with got three questions. I'm going to do this rapid fire. Chromie asks, or Chrome asks, after an investor agrees to invest, how do you ask them when the funds will be sent and what the average time this takes? Typically, that's going to be in some. Typically, if you think about the process, there's going to be some sort of term sheet which is non-binding. You know, where it's going to say, okay, these are the basic terms of the investment. Then what happens is there's going to be the legal document phase, which is going to say everything's going to happen. And then there is going to be the transference of funds. Typically, depending upon how complex this is, if we're talking about friends and family, it could literally be a day. If we're talking about angel investors, it's going to take a little longer, but still it can be very quick, maybe a week or something like that, very fast. If we're talking about VCs, this process can take 30 to 45 to 60 days. What you will find inevitably, I will tell you this, is that you will be the only one who will have a desire to move fast, which is one of the crazy things about raising money, but that's the way it is. Troy, good to see you, asks, do you like safe agreements? I find them confusing to explain. I love safe agreements for early stage startups, but I will bet in your particular case, we're talking about for people who are not experienced investors, they are confusing to explain. So maybe you're better off, instead of doing safe agreements, instead of doing a safe, why don't you do this instead? Why don't you just say, okay, I'm going to give you 10% of my company for whatever you're trying to raise? Much easier to do that. Okay, and then Fabian, in our last minute, does it make sense to found the company in the US for marketing reasons, even if I'm in Germany? That's a really good question. The answer is maybe, depending upon if you're trying to market to US companies and we're trying to do something there, maybe. I'm not a lawyer, and this is, I think, more of a legal question than anything. I don't think it's going to matter as I'm kind of thinking this through, I'm sorry, I don't think it really matters for marketing reasons. There are plenty of European companies that are successful in the United States. I don't think it really matters now that I'm thinking about it, so I probably wouldn't do it. No, it's interesting. And your follow-up, I'm gonna go after this, but is because every new thing comes from the US, as much as I love the United States as an American, I don't believe that's true, especially not anymore. There's plenty that comes from all over the world. There's plenty that comes from Germany. So be proud of your heritage wherever you are. Be proud of your country wherever you are. And look, if you're based in Germany, there's nothing wrong with it. I don't think it's going to stop anybody in the United States from buying your product. All right, with that, thank you all for coming today. It's been great. We'll do it again next week. Take care and join, if you haven't already, join the School community. Join it. Thanks a lot. Take care. Bye.